All right, today we are diving into the Q3 2025 earnings for Rekor Systems. That's ticker REKR. Now, management called this the strongest performance in Rekor's history, and honestly, the numbers really seem to back that up. But the market's reaction was a bit complicated, so let's unpack exactly what happened.
First up, the headline number, a record-breaking quarterly revenue of $14.2 million. This wasn't just a little beat. It came in about 13% higher than what analysts were expecting, and maybe more importantly, it's a 35% jump from this time last year. That shows some serious acceleration in the business. And hey, it wasn't just about revenue. Rekor also delivered a big beat on the bottom line. The GAAP loss per share was only 3 cents. Now, Wall Street was bracing for a 5-cent loss, so this was a full 40% better than expected. So you've got record revenue, a big earnings beat, which, brings us to the main question here.
Yeah, what gives?
On the day they announced all this great news, the stock actually dropped over 7%. It bounced back a little the next day, but still, if the results were so fantastic, what's making investors hesitate? We're going to dig into that puzzle, and we'll start by taking a closer look at the financials.
Okay, let's get right into the numbers and see why management is calling this a major inflection point for the company.
I mean, just look at the difference a year makes. It's pretty striking. We already talked about the 35% revenue jump, but check out the adjusted gross margin. It leaped by nearly 2,000 basis points, all the way up to over 63%, and that flows right down the line to profitability. The adjusted EBITDA loss shrank by 84%. The official GAAP net loss got smaller by 67%. This isn't just a little bit of growth, this is a huge improvement in how the business actually runs.
So how in the world did they pull off that massive margin expansion? Well, it all comes down to a really smart strategic shift in where their money's coming from. See, the company is deliberately moving away from selling lower-margin hardware and one-off services. Instead, they're focusing on high-margin, recurring revenue from software and data as a service, or DaaS. This is the whole ballgame for them, and Q3 is proof that it's really starting to pay off.
And this move to a DaaS model, it's being supercharged by some major contract wins that are completely changing the company's entire profile.
The CEO, Robert Berman, he put it perfectly on the earnings call. The market itself is changing. Government agencies, they don't want to own and maintain a bunch of complicated hardware anymore. They just want the data, the insights, delivered as a service. And this trend is exactly where Rekor is placing its bets.
And here is the proof in the pudding. That Georgia Department of Transportation contract, it's a landmark deal, a total game changer for the company. It's an 8-year deal worth at least $50 million, but it could go over $100 million. I mean, that single contract validates their entire DaaS strategy. On top of that, they got an initial order from South Carolina, they expanded their platform into 3 more large states, and maybe most telling, their pipeline is growing because RFPs, the actual bid requests, are now being written specifically for the kind of model Rekor offers. That's huge.
Okay, so even with all this incredible momentum, there are clearly some worries out there that are weighing on the stock price. So let's look at the other side of the coin, the risks and red flags that are keeping some investors on the sidelines.
So you really have 2 competing stories here. The bull case is pretty obvious. Record results, massive new contracts, and they're being disciplined with their spending. Operating expenses are actually down 20% year over year. But the bear case is just as real. At the exact same time they announced these fantastic results, the company also announced the immediate resignation of its CFO. Now, they say it wasn't due to any disagreement, but a surprise change in the C-suite is always going to raise eyebrows. Plus, the company is still technically losing money, and there's a lot of short interest, about 12 million shares betting against the stock. This is the tug-of-war that explains the market's weird reaction.
So after putting this all together, where do we land on Rekor? What's our take moving forward? Let's get to our prediction.
Okay, so based on what management was saying, we're forecasting Q4 revenue to tick up just a little bit to around $14.7 million, and we see that loss per share getting even smaller, down to about 2 cents. In the short term, we expect the stock to be kind of range-bound, just treading water a bit while the market digests that CFO change. But we see a clear upside bias here. Any good news about them executing on that massive Georgia contract could be a huge catalyst for the stock.
So we are initiating our coverage with a rating of outperform on Rekor. Now look, the risks are real. The CFO transition, the ongoing losses, you can't just ignore those.
But the fundamental momentum is just undeniable. The pivot to a high-margin data-as-a-service model is clearly working, and that Georgia win proves it. We believe the strength of their operations is more than enough to outweigh these near-term concerns, and that Rekor is set to outperform the market as it keeps scaling up these huge contracts.
This is not financial advice.